Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm joined with Manu Choudhary, who's the CEO of DMA Link and the co-founder of DeFinity. How's it going, Manu?
Hey, Paul, how are you?
Very good, thank you. So, Gary Gensler this week?
Gary Gensler, it wouldn't be Friday if I wasn't talking about Gary. No, I'm going to talk about the SEC though. So just a very quick reg update. Essentially, we found out this week that the SEC has approached Uniswap Labs, and in case you didn't know, Uniswap Labs, the business or the company behind the decentralized exchange Uniswap, and they've asked them to explain how they work, basically how they source clients, how they market their product. I think I can guess how this is going to end. And I suspect the way this is going to end is there's going to be some introduction of KYC to Uniswap, which is insane. It's a decentralized exchange. Is this the end of DeFi? Definitely not. There are another half a dozen very good platforms that people will migrate to anyway. It's a real shame because Uni is pretty cool. I've been using that for probably since 2017. But yeah, it does look like, as we kind of discussed over the last couple of weeks, the SEC have decided to declare war on DeFi, and the first casualty may be Uniswap. Just on other interesting SEC news, so I'm sure you're probably aware that the SEC have been having a legal ding-dong with the good wholesome folk at Ripple Labs, who are the people behind XRP. And they basically responded this week by sending them a request for the holdings of all SEC employees or previous holdings of SEC employees of Ripple. Now, nice try. I think it's great. I think that's quite a bold thing to do. But here's a reality check. Do you really think they're going to disclose the ownership of their employees of XRP that will disadvantage the case? I think probably not. So I think it's neat. It's a novel idea. It's going to go nowhere fast. And if anything, it's probably going to piss the SEC off even more, which is interesting. And then I guess just in terms of market news, obviously we saw quite a material correction in Bitcoin on Tuesday, although I think people forgot to sell Solana, which did nothing but continue higher, which is interesting. What's interesting about this correction is, and I know we've been speaking about the fact that we probably need to see a decent correction before we form a base and really bounce to 100K plus. This was very, very much, I think, manipulated. This didn't seem like a natural market move. And the reason I say that is because Tuesday, coincidentally, was the day that essentially El Salvador made Bitcoin legal tender, in addition, obviously, to the US dollar, which was previously the only legal tender there. What's really interesting about this is essentially the president tweeted about 45 minutes after the market began to collapse, thanking the IMF for helping him buy another Bitcoin and saving the country $1 million of fiat, which is a weird thing to tweet.
Yeah. Why would the IMF be helping them though? That's surely it's just something.
No. I think he's being sarcastic.
Basically,
someone dumped $3 billion worth of Bitcoin on the market at one moment in time. Don't know who. Could have been anyone really, but it's a weird coincidence that the same day this becomes legal tender, you see someone come along and dump. And also what was really interesting is I tried to actually buy some. I tried to buy the dip, and I couldn't buy it on my account. My Binance account wouldn't let me purchase.
Why?
My Kraken account wouldn't let me. I'm not sure. I think I know why, but
okay.
but yeah, it's interesting. So I look, I don't know who actually was behind this, but it clearly was manipulation. So what's really interesting about this is that why would the IMF be annoyed or aggrieved at this? Probably because if you make Bitcoin legal tender, you can then repay your debt to the IMF in your legal tender, i.e. Bitcoin. So I think that might be a bit of an issue. So I know the World Bank has had a massive problem with them. The IMF has openly said this is a very bad idea, and I think the Bank of International Settlements have said it's a very interesting experiment. So again, kind of neutral to quite negative on El Salvador. But if you look at the logic behind why they've done this, it's actually quite sensible. So they, certainly over the last 18 months, with this insane amount of money printing we've been seeing, have had huge issues with inflation domestically because they rely on the dollar. They have no means of control because the Federal Reserve does whatever it wants. And again, El Salvador has to just deal with the consequences. In addition, it's quite an impoverished nation. So 25% of its GDP actually comes from remittances from those that are outside of El Salvador. And if you think about logically, how do these remittance companies work? They're quite predatory financial institutions that prey on the weakest in society and charge insane, bid offer spreads of 10, 20%. In addition, they have minimum fees of $20, $25. So if you're sending $100, you're going to end up paying probably 35% of that away just in spread. By having Bitcoin as a way that people can actually transact and send money back to their relatives, well, the frictional cost reduces to pennies on the dollar. So this, I think, is one of the main drivers. And there's some great positives for El Salvador. They're spending time and effort educating the population about how to use digital assets, how to use wallets, which is great. The only criticism I have is every single wallet is basically custodial. So I'm a big fan of freedom, a big fan of liberty, and I like owning my own assets. And basically, with a non-custodial wallet, which is what I'd recommend to anyone, you own the keys. With a custodial wallet, someone else is the custodian. They're the intermediary that basically keep your keys safe for the interim. So this is the one issue I have. I can't be too critical. I think this is a very brave move, and I think it's brilliant. And this could be a turning point, I think, for certainly countries that are either pegged or rely exclusively on the US dollar to having a bit of a hedge in an asset class that will be a very, very good protector from certainly the adverse effects of inflation, which unfortunately is only going to go higher.
That is absolutely fascinating. The fact that they are allowed to pay it back in Bitcoin makes it even more interesting. That sentence alone is a game changer. So do you think that they're going to be allowed to continue down this road, or do you think there's going to be a lot of pressure put on them to reverse it?
So I think, look, if I was at the IMF, the best case scenario, what would please me the most, being anti this entire process, is if we saw an absolute cataclysmal correction in Bitcoin. And what you'd see is anyone who went into the market and FOMO'd into the market will get absolutely wrecked by that. And then rather than having a dozen or 24 people politely protesting that they're not happy with this, you'll have full-on riots happening. So if I was that person, that is probably what I'd like to see. Is that going to happen? I'm not convinced it is. I think it's one of these things that's very difficult to stop. It's got to a point whereby I think if they were going to stop it, it would have already happened by now. But it's a very, very interesting move. And also, the other thing they did, which is really interesting, is they removed capital gains tax from Bitcoin. In fact, all digital assets. So if you make a capital gain as a citizen, or if you make capital gains as a resident, you pay zero tax.
I think they're going to find that there's going to be a bit of immigration coming in. I mean, that's very interesting. So opening,
and I believe, and again, don't quote me on this, I believe they're offering permanent residency for anyone that invests more than 3 Bitcoin in assets, which I'm guessing means property. I don't understand what other assets you'd buy there. And I believe they're offering a full passport for people that I think invest more than 10 Bitcoin or so, but I'm not sure on the last bit.
Wow, this is fascinating stuff. Right. So what is going on in the markets? Well, I always start off looking at the S&P, and the reason for that, obviously, the biggest US market, and it's been in a fantastic upward trend. So is this a top? This is the question. Is it a top? It doesn't look like much of a top here because it's a very short, like rounding top, very small, not very significant. But there has been a loss of momentum. If we take this as the central line and this is as a trend channel, the market has struggled to get above the middle of this trend channel. So that's just one small issue, but not really much to write home about yet. But we have got prior support, which comes from resistance here. And this is at the level of 44.79. If we break below that, it starts to get a bit more interesting. It would look like the market is turning over. Now, I'm watching the European markets at the same time, and this is one that I put in the weekly last week. And I was saying, look at this area here, this could be a top. And it triggered as a top, and it's come back to the trend line. So the market's definitely correcting. Now, whether this moves into a bigger correction or whether it becomes just a minor blip before the market goes up, we have to wait and see. But it's definitely in a corrective phase. It's just a question of what size it is. Now, why am I looking at the SMI, the Swiss Market Index, and the S&P? The SMI was one of the strongest markets on the way up. So the fact that it's weakening is telling us potentially that the other weaker stock markets are turning down. Now, this is the DAX index, and it's in a range. It's made a similar small double top here, but it's basically still in a range. And if you look at now, if you bought the DAX on the 11th of June, I always try to think like a trader, like if I'd bought this, how happy would I be? If you bought it on the 11th of June, you'd still be either you'd be slightly in a loss, not much of a loss, not much of a profit, but it's going sideways. And that, from a market perspective, is a bit of a concern, because when traders start to see that their positions aren't, inverted commas, working, they start to get out of the markets. Now, the strongest market in the US is the NASDAQ. And again, we've got a very small pattern here. It's not enough to write home about in terms of being a reversal, but it is still consolidating. It still failed to move higher. And we need a bit more evidence that this is going to be something bigger. But I'm keeping a very close watchful eye on these levels and on these markets, simply because the stronger markets are starting to weaken. And at the very least, we're in a consolidation. Now, you've heard me mention the VIX a few times, and the reason is very simple. The VIX lows are rising, and it's in a range. And that has been when the S&P has been making new highs. So somebody's been buying the VIX, buying protection against a fall each time it's come down. And each time it's come down, they've jumped in a little bit quicker to buy that protection. So I think we should be cautious potentially about what the equity markets might do going forward. Now, we've seen that the commodity markets can move completely independently, and also the cryptocurrencies can move completely independently. But if there is a big move in equities, there will be what we call a risk-off situation, which means everything will go down. So that's kind of what we're a little bit worried about, because we're probably due one of those before the end of the year. We don't want to miss the signs for it. So that's why I'm possibly being hypersensitive, but I'd rather be hypersensitive and miss a move than not sensitive and just miss a massive move. So one of the other things that's also very much worth looking at is the bond yields. If we look at this, is actually quite amusing when you look at it on a chart. You've got bond yields in Germany, and this is just a reminder of why people are looking at crypto and other assets in the first place. 10-year bond yields in Germany are yielding negative 0.34%. So you're guaranteed to lose money if you invest in German government bonds. US 10-year bonds at least are in a positive field, and we're trying to break up over this 1.37 level, which is really building up to being a massive level, because it's tried 3 times to break through and it's not quite made it yet, but it's still within an upward trend. So I'm watching this very carefully. So last week we talked about what would happen if non-farm payrolls was worse or better than expected. Could it shake this yield trend either into a sharp move up or sharp move down? The answer was it's not done either. It's just stayed within this range. So it's a little bit frustrating. We haven't got the clarity yet on where this is going, but we will get it soon. So we just need to be a bit more patient, and we'll find out whether this is going to go basically up to 180 plus, or whether we're going to get a deflationary collapse and it goes back down again. So what does that mean for Bitcoin? As Manu quite rightly said, we've seen a very big move, and I'm sure everybody's noticed that move. We were cautious on this move. Last week, because Ethereum had made a new high, it made a short-term buy signal. In other words, we thought it might break through this prior high. But this is the problem. When you're testing levels in a correction, you don't know when the market's going to snap back. Now, would we expect a move like this? Not really. But is it possible? Absolutely. This is the market that you're dealing with, especially range-bound markets, which can just get a really big move out of the blue, which is obviously what we've just seen. Now, in breaking back down, it's broken some really important support levels. And I think this argues for the market to stay in a range for the rest of the year. So that was kind of what I was hoping, well, not necessarily hoping, but this is what I expected it might do. Given that it didn't break this low, I thought, well, okay, it's going to go up a little bit, but then should come down, which is range trade, consolidate, and then move higher. That's sort of the neutral view of where it should go. The bearish view is if it takes out this 28,600, then we go towards 20,000. That's still possible. That is obviously still possible, but we have to take this market one step at a time. I've said this before, it's a one step at a time market, because it's still in this consolidation phase from this rally. So in other words, it's it's pivoting around its central point. So its central point is 42,000, which notably it got very close to and managed to hold, but didn't break. So 42,000, if it swings below that, then the next support we've got is 37,300. If it breaks below that, then we're looking at 28,600. Now, if it can bounce back up, fine. The level where I turn automatically bullish is if it breaks 5,400. So 53,500 to 54,000. So 53,500 to 54,000. If it breaks that level, that's where I think, well, come on, it's going to be going into the new high. And that will bring forward the targets of 100,000. But because Bitcoin itself has been underperforming the other markets, we've had the most caution over Bitcoin as opposed to the other cryptocurrencies. Now, Ethereum has obviously been doing very much better. And this is a chart of Ethereum. We were saying last week that because it was very close to the previous high, it could actually take it out or it should make a run on it. The opposite happened, which happens. There's not much we can do about these market scenarios, especially if there's a manipulated broad sell-off. Again, this is the market that we're dealing with, but this trend is holding a little better than the Bitcoin trend, and I think a consolidation here is not unwarranted. And I think we're going to have to wait to see how this trades before we get excited in either direction. But it is closer on the journey into trying to make a new high. So I'm, out of the two, still more bullish on Ethereum than I would be on Bitcoin. Now, I showed the chart in our weekly of the Bitcoin versus Ethereum chart, and this is a very interesting, what we call ascending triangle, although it's slightly curved in nature. What we're seeing is that each time Ethereum weakens versus Bitcoin, there's an opportunity to buy Ethereum and sell Bitcoin. And the level where this should accelerate is when it breaks this high. So it's not done it yet. So we might just see some continued range trading for the next sort of week or two, or maybe even a bit longer. But if it can break out through this high, I think we're going to see a sharp move. So 2 or 3 weeks, maybe a month ahead, we should have resolved this pattern and be into a new strong trend like this previous trend here. So Solana, as Manu quite correctly said, it just ignored it. I mean, we were looking at whether there was any evidence of it knowing that there was a correction, and it just literally dipped down, went straight back up again. I popped this in the weekly because it was so interesting, but this trend line here, I put in that I thought it would break because it was just a little too steep. The market has been rallying since the 20th of July, and that rally has been getting faster and faster. So a break of this trend line here, this recent line, which I can change now to a dotted line, is not unwarranted. That obviously will happen because the trend rate is too high. And it's actually showing a very short-term consolidation. So also, it's something that I talked about on the Crypto Rain channel. When you get to a period where many people are looking at a certain market, that's probably a time to be the most cautious. So when it gets too hot and everyone's talking about it, then it's the temptation for people who got in early to take profits can become quite large. So that's why you might see a correction when there's most noise around a particular crypto asset. So I think this is due a bit of a correction. I think it'll be healthy for it to correct, but the trend is still very good. And overall, I would still be bullish. And it would take quite a lot for that to change because the trend rate has been so fast. The only other final thing to say is that the dollar has been in a consolidation as well. And I still think that the outlook for the dollar is that it should rally over the coming months. But it's in a consolidation phase for now. And I don't think we're going to see a breakout. Well, it would be strange to see a very strong breakout in Bitcoin and gold and silver until this moves to a weakening trend. So 2 steps ahead, I do think the dollar into next year will start to weaken, but for the rest of this year, I think it will be stronger. So that's why I'm expecting this big move in 2022, also in gold and all the precious metals. But actually, I think just before we go, we should look at some of the precious metals because they are quite instructive. Now, first of all, you'd think I'd look straight at gold, but actually I look at palladium and platinum. Now, this is the chart of palladium, which you can see does not look bullish at all. In fact, it's correcting pretty hard. And platinum itself is doing the same. We featured that in the weekly. This trend line, this downward trend line has worked very well. So palladium, platinum, both very weak. Can gold and silver buck the trend and go against them? Yeah, it can. But it's unlikely that they'll move into bullish trends whilst there is what we call divergence within the sector. When we get a really bullish phase, everything will be moving up together. So gold, silver, palladium, platinum will be all moving in bullish trends. And then we know we're in a primary bull market and we'd expect to see extremely big moves. But there's fragmentation going on, which means that we've got to be careful about which markets we pick, which is exactly the same with what's going on in the crypto assets. They're not all moving up, so they're not all equal at the moment. So you've got to be careful about which ones you get, which ones will outperform and which ones will underperform. And as a general rule, we're always looking for the strongest markets and not the weakest. Most people look for the weakest markets because they think those are the inverted commas cheapest. But usually, and not always, there's always exceptions, but usually those are the ones that continue to underperform. So we try to avoid those. Obviously, things can flip, but we like to go with the strongest markets. So that's the overview of the markets from a technical perspective. Was there anything I missed there, Manu, that you might want to look at?
So I guess certainly not from a technical perspective. I guess just from a macro perspective, one of the things to bear in mind is we have elections in Canada and also Germany later this month, which obviously add a degree of geopolitical risk to the markets. And again, the infrastructure bill, which we discussed last week, will probably be passed at the end of this month as well. So there's a couple of event risks that I think may potentially frighten the market over the course of the next couple of weeks that we need to be aware of and mindful of.
Absolutely brilliant. No, thanks, Manu, for all of that. Really interesting insight into the fundamentals of what's going on. What do you think about crypto? Do you think the markets are going to go up, consolidate, or down? Also, what other markets would you like to look at? Put them in the comments and we'll check them out for you next week. So until then, thank you so much for listening. Thank you so much, Manu, for your thoughts, and we will catch you next time.